All right, gang, new day, new video. So another golden algo nugget I have for you today. And I'm doing these nuggets because I want to celebrate with you that I am an entrepreneur now for 20 years. So that also means I have a 20% discount until April 1st off on my community and my Discord community, my course, which also provides my weekly outlooks, my daily outlooks, and my trade setups. So if you want to join, you get a lifetime discount of 20% off on all plans. So that's what I'm celebrating, and I want to celebrate also by giving you these golden algo nuggets to study and look into the charts. So have fun with it, because today we're going to take a look at another thing around the RTH gaps. So first of all, let me repeat what those are again. So I'm on a NASDAQ chart right now, the futures chart. And if you switch below here from electronic trading hours to regular trading hours, you will see this gapped chart. And every time at market close, the market closes, and then at 9:30, the opening bell, the market opens. So that's what creates these gaps. Well, there's a funny thing going on with these gaps. And that has to do with the fact that a lot of the times, not every day, of course, because otherwise it would be too easy, but a lot of the times you can get kind of an indication where price is going to reverse. What? Yeah, where price is going to reverse. So we can do a measurement onto the gaps to get an indication of that. So we get our fibs out, and what I have here is a Fibonacci, and we're going to measure it from the close of the candle, so the close of the RTH regular trading hour gap, to the open of the new candle. And then you will find something really peculiar. That is that you'll see that a lot of the times when the gap isn't that super big, where do you see the low form? Between 2 and 2.5 standard deviation. And after this, you see the move up. So here you see that price formed the low between 2 and 2.5 standard deviation. And so this is a place you can look for a reversal play. Whenever you get your regular confirmations, of course you need to look at if it lines up with something on the left. Well, we have another gap right here, so it was aiming for a fill of this gap right here, and that lined up with the 2.5. So it's not a thing you trade just based on the measurement, but it's based on whatever you're looking for. So you need to make sure that it's in the direction of your bias, that you have something you're looking for here to confirm that you can take a trade. And of course you can see a perfect buy model in here, which comes back up to this high again, somewhere in PM session by the looks of it. Yeah, just around lunch. So if I go to the 1 minute chart, you can see inside of this that it made a buy program, so sell program to buy program back to the initial high that broke the lows. And it's inside of that 2.5 standard deviation. All right, let's take a look at another example. Let's take a look at this gap. So there's another gap right here. Here it closed, there it opened at 9:30. This is 4 p.m. As you can see in the chart, this is 9:30. So that's a gap. What do we see here? Price pushing up. You see candle closes. Let's get the chart. You see price push up, around 2.53, so a little bit higher. It is messy, I must say. I mean, this price action is horrible, but you still get the reversal at that measurement. So let's go back a little bit more. Where were we? Let me replay it. That's maybe easier to do. Replay to here. Let's see what happens here. So this is another gap. Closed here, opened there. Measure it. This is the next day, by the way. Does it reverse? Yeah, also 3 standard deviation, but it's not on the same day. So as you can see, this gap was a little bit bigger. And then what you see a lot of the times is that the target doesn't get met, or at least not in the same day. You can see it just pushing up, and then you got that move. So this one wouldn't have worked out. Then let's see, a gap before that. This is a close open. There's no gap here. There's a gap here, but I can already see that price did not go any way, so no use to measure this. Then we have a gap here from the close to the open. Well, look at that. Let's replay that. You can actually measure it both ways, probably. So this is the close and this is the open. Yeah, 2.5 standard deviation. One more wick, probably Newsday, and then coming lower. And it's actually, if I measure it the other way around, so let's reverse this thing. You can see it's also coming to 2 standard deviation here, so that's kind of funny. But it is a thing. So it's an algorithmic thing that just keeps popping up on the chart. Let's turn this off now. This one we already did. Let's measure the next one. Oh, let's reverse it back, shall we? Yeah, all right. The gap close, gap open, 2 standard deviation, reversal. And like I said, you need to look for your POIs. In this case, this was also overlap with this RTH gap, and then we find the reversal plate. So that is kind of funny, right? That's the same thing that happened right here. So that, I believe that is high probability then. And of course, you need to line it up with the order flow that's in here on a lower time frame. But it's definitely worth looking into and see what you can get out of it. Because, yeah, I think it's kind of funny that, that the algorithm is doing these kind of things. So you can definitely build a model around this if you would want to. This is a big gap, by the way, smaller gap. Let's measure this. Yeah, 3 standard deviation. Candle closes below the 2, reversal play. This was today, I believe. Yeah, that is just a big expansive day. So nothing happening here, but just coming inside of the gap. So yeah, I hope this golden nugget will help you frame setups around this. So make sure you join the community with the 20% off, and I will see you inside of the next video. Bye bye. Have a great day.